Hi guys! Welcome back to the September and October update of my dividend growth portfolio. In this portfolio, I currently have 141,000 euros split between 21 stocks and 4 ETFs. And because I was on vacation by the end of September and had to skip the update, we will have a lot of catching up to do, as I will show you all the developments from the last 2 months today. One of them is actually my first stock that became a 10-bagger. But the biggest developments have actually not been in my portfolio, but with this channel. And that is thanks to all of you. Because we have just reached 1,000 subscribers last week and blasted by the 1,000 mark, with currently 1,043 people being members of the Cashflow Maniac family. This is absolutely incredible and far beyond anything I would have ever imagined when I first started this channel. So let me start by saying a huge thank you to all of you who's watching this, and especially to the ones who are exchanging thoughts with me in the comments. I know this sounds cheesy, but this journey in the last 2 months with all of you has really changed my life in a way that I would never have thought possible. That is also why I'm quite happy and terrified at the same time to announce today that I decided to quit my job and go full-time on YouTube, despite not earning a single penny from it so far. But not only on YouTube. I am also planning to refine and improve my quant rating system and update it to a level where all of you can use it to rank your stocks and benefit from an objective way to look at them. But this will definitely still take some time, and I'm talking at least a year. This is all still pretty new and I can't share too many details yet because I'm still in the midst of processing my resignation and I don't even know yet when exactly I will leave my company. I still want to close some topics first and properly hand over my projects. So it will take some months. I will make a bigger channel update and let you know exactly what's going on as soon as I know the details. But at least I can already tell you that I will be able to post more videos and also keep on working on improving the quality of the videos. But enough of the rambling now. Let's have a look at how my portfolio performed and especially which company could 10x their position. And by the way, if you're new here, my name is Florian. Thank you for joining me today. At the start of September, my portfolio had 130,719 euros after a pretty bad performance in August. But the last 2 months went pretty well and my portfolio is up by 8.2% now. I have 108,000 euros in stocks and 32,000 euros in ETFs. And my ETFs even had a better time than my stocks in these 2 months. And this is because a lot of this good performance only came from a handful of stocks. Ferrari, that is on top here, is a new position that I just entered last week, so this is fairly new. But my best performing stock over the last 2 months actually was ASML. They had an amazing performance leading up to their last earnings call. But TSMC and Alphabet also had a very good performance, and with NextEra Energy, one of my stocks that didn't profit too much from the AI hype up to now, is also up by 14%. So the last 2 months were a bit surprising to me, but it's good to see that some of the stocks that didn't do too much so far are also finally seeing some love. We'll also have a brief look at my worst performers in a second, but first, let's also see how the market did. Overall, the S&P 500 had quite a good month with only entertainment and consumer defense and some financial stocks being in the red. But especially our big techs and also the utility sector are very much in the green. But when we look at the overall performance of the S&P over the last month alone, we also see that the general indices went largely sideways. The best performance had the QQQ, the Nasdaq 100, that ended the month with a strong push. Also interesting to see is that the European stocks that outperformed the S&P 500 and the MSCI World in the end. The 1.85% here is actually wrong, and I'm not sure why this number is not updated yet. The real performance of the Stoxx 600 was not 1.85% but 2.3%. Quite a difference. But over the whole year, it looks different. Here, the Nasdaq still had the best performance, while the Stoxx 600 had the worst. Interesting to see is that the MSCI World still outperformed the S&P 500 so far this year. From my stocks, I am actually most excited about the performance from Alphabet, because this is my second newest position and I just started buying into them in July. So even though I only own them for a quarter, they are already up by 38% from my average buy value. And a lot of this performance came after the closure of one of the biggest lawsuits in September. Good thing then that I just increased my position by 5 more shares by the beginning of September. Unfortunately though, I did miss this large jump in stock price with this large batch. But I wanted to wait for the conclusion of the lawsuit for this buy because I think it could have easily also gone into the other direction. But still, I already bought the majority of my Google stocks in the month before, so I won't be too sad. Another stock that went pretty well and that finally managed to break out of the hole they were stuck in over the last year was ASML. I am not complaining though, because I used this dip as an incredible chance to heavily buy into the stock since I first entered a position just at the end of last year. So I also don't have this position for too long yet. And even though a lot of the performance already came before the earnings report, the report also showed a strong outlook for the next quarter and also the next year, even though the sales and EPS numbers from last quarter came in a bit lower than the quarter before. Still, for the full year, they expect a growth of 15% compared to 2024 because they see an increasing momentum for the EUV machines. But unfortunately, they also expect their business in China to decline significantly next year because of the export restrictions on some of their machines. My third best performer after ASML and Alphabet was TSMC. They're also a fairly new addition to my portfolio because I just added them after Trump's Liberation Day in April. And returns of over 50% in half a year also indeed feel pretty liberating. So thank you, Trump, I guess. But I mean, we just need to look at the numbers from the last earnings report that are all up by well over 30% on a year-over-year basis, and the revenue even over 40%. The majority of this growth came from the high-end or leading-edge chips. In the last quarter, the most advanced chips with 3nm nodes accounted for 23% of the revenue, and chips with 5nm nodes still for 37%. And they also expect a strong fourth quarter that will also be driven by the same leading-edge chips. These chips are, for example, the chips that are used for data centers and AI, as well as high-end CPUs or GPUs. They also have already started the production of their next node, the 2nm node. With this, they think that the revenue and margin in Q4 will be on a similar high level as this quarter. For the full year 2025, they expect a revenue growth of around 15% compared to the year before. The amazing thing is that despite this great performance and outlook, the valuation is still well below the sector median. They only have a trailing 12-month PE ratio of 24.7 and a PEG ratio that is only 0.5 for the trailing 12-month. This implies an undervaluation of 50%. So not only are they growing like crazy and benefiting hugely from the AI data center build-up, the stock is also still pretty cheap compared to others, and their competitors are also far behind in terms of production capability and technology, but also yield. In my stock scoring system, they get the second place in 10-year score just after Novo Nordisk, and even the best score in the next 5 years. Now, admittedly, I have not put in the values for too many stocks yet. So this place doesn't tell us too much at the moment, but they still beat other big tech stocks like Microsoft, Meta, Google, and even Nvidia that also all have quite good values here. But as I said many times and will say many times more, I want to be fully transparent about my investments here. And the results last month were pretty mixed, with a couple companies that went very good, but also a couple more that went pretty bad. There were even 5 companies down in the double digits, with my German small-cap Energiekontor and the US semiconductor giant Texas Instruments being the worst performers of the month. But with Novo Nordisk and Surgical Science Sweden, 2 of my health technology stocks were also down in the double digits. But why is this? There is actually not a single reason for this, but every one of these companies is facing some challenges. 3 of these stocks are European stocks, and they have at least one thing in common. And that is the drop of the dollar compared to the euro. This has had quite an impact on these stocks. In the case of Surgical Science Sweden, for example, this has led to a drop of their revenue in Q2 despite an underlying increase of 4%. So even though their pure operating performance was positive, the result still looks negative due to currency effects. I am also not concerned about most of these stocks, but there is still one that I'm starting to worry about. And that is Energiekontor. because in their case, the reason for the drop is that they had to cut their earnings outlook for the year again because some of their projects that should have been sold this year have been delayed to next year. Unfortunately, this is already the second year in a row where this is happening. Last year I still didn't mind too much because the initial plan was to sell these projects in the first half of 2025, but this largely didn't happen. Now the sale of these projects is shifted again, which led to the company cutting their profit guidance for the year by over 50%. And while it is now shifted to next year, the company doesn't actually sound too optimistic that this will really happen. So my position is down by over 30% in total now, and I am far less certain that they can quickly recover than I was last year. So I will do a proper update of my analysis in the next weeks and decide if I will keep the company or if I need to sell them. Right now I'm leaning towards selling them because my initial investment thesis for them did not manifest at all up to now. My second worst performer was Texas Instruments, and for them the picture is a bit more mixed. The last quarter went actually pretty well, with the revenues being 14% above the same quarter last year, which was even above the expectation of analysts. But the outlook for the next quarter was disappointing and shows a decline in revenues compared to the last quarter again. And we should also not forget that the company had quite a good run since April and even reached new all-time highs in July. I believe that this also led to the stock being quite overbought and expensive. I mean, they are still in the midst of their capex cycle and their main industries, particularly the automotive industry, are still in a down cycle. So maybe investors got a bit overexcited by the last quarter's performance and were grounded by the outlook again. But as always, in the midst of all of this, I still kept buying new stocks. I already showed you that I increased my Alphabet position in September, but in October I even added an entire new position. And that position is Ferrari. On the 24th of October, I bought 3 stocks of Ferrari worth 1,027 euros. Ferrari was one of the stocks I had on my watchlist for quite a while, but I always found it pretty expensive. But after the Capital Markets Day in the beginning of October, many investors and analysts were not satisfied with their forecast and the stock dropped by over 25% in total. So I used this drop and added Ferrari to my portfolio as the first luxury company that I own. So this position will help me to further diversify my portfolio and reduce my crushing US weight, while at the same time also establishing a foothold in the luxury industry and again increasing my diversification. Now, if you've been following the channel for a while, you might know that this is something I have been focusing on since the end of last year. But despite my efforts, I still have around 70% of my portfolio in US stocks. This is also because some of these stocks like Nvidia, JP Morgan or Microsoft have been my absolute best performers, which of course increased their relative position size, even though I have not bought more of them for quite a while now. But this also brings the problem that I now own 21 individual positions. This is still below the threshold of maximum 30 stocks that I set myself for this portfolio, but it is also one stock more than my target count of 20. Nothing to worry about yet, but I need to get careful with adding new stocks. And you know me, even though it might sound like it, I didn't choose this number randomly. No, it comes from one of my favorite books about the statistical backgrounds for investing, A Random Walk Down Wall Street by Burton Malkiel, which to me always sounds like a character from the PC game Diablo. But maybe this is just my twisted mind. Anyway. In this book, he shows that the sweet spot for diversification is at around 20 to 25 stocks. After that, the effect from diversification diminishes quickly. And of course, this also only works if the company you own are also diversified over different countries and sectors. It won't help you if you own 20 tech stocks from the US. That is not diversification. But with these additions, my portfolio now looks like this. The most notable changes are that my position size of Nvidia was further increased, which again shows the amazing performance of them. They still managed to grow their share despite me putting more money into other stocks, which should rather decrease it. But my Google position also almost doubled and ASML's size did grow by 30% from 4% to now 6%. I am actually starting to worry about Nvidia a little bit. It has been my far largest position, but they are starting to approach the 15% weight now. And while I still think that they are a fantastic company and have a good couple of years of strong growth ahead of them, their size is getting uncomfortably large now. But on the other hand, I also don't want to cut my best rows in my garden too quickly. So it's a hard decision to do. If you guys have any thoughts on this topic, I'd be happy to read them down in the comments. I am currently thinking that I'll probably do some smaller rebalancing by the end of the year and cut Nvidia down to around 10% and use the money to increase some smaller positions like Novo, Ferrari or Surgical Science. And by the way, if you haven't guessed it already, the 10-bagger I was talking about is also Nvidia. Their current value is now more than 10 times my buy value. Now, this leaves us with the dividends I received in the last 2 months. And if you like the video so far and my investing approach, please consider hitting the like button and subscribe to the channel to not miss the next one. I mean, we just surpassed that 1000 subs, so the next step is 10k now. In September, I received 6 different dividend payments. Visa started off the month with €9.60 on the 3rd of September. This was followed by S&P Global with €9.84 on the 11th and Microsoft with 14.82 euros on the 12th. On the 17th, I received even 2 payments from Google and NextEra Energy. Google paid €4.07, while NextEra Energy was my biggest payer this month with €31.51. And last but not least, Meta closed the month with €1.78. So in total, I got €71.62 in September. In October, I only got 3 payments, but the total sum was still higher than in September. First, Nvidia paid me a whooping 68 cents. A pretty tiny amount for my biggest position. So come on Nvidia, you got enough cash now, you can do better. On the 13th of October, TSMC paid me €20.53 and VG, one of my biggest dividend payers, paid me €74.01. In total, I received €95.22 in October. This is already half the amount I received in the 4th quarter last year. So I'm on a good track to beat the dividend payments from last year again. And by the way, I want to briefly mention that I made a mistake in my last portfolio update. I accidentally put some dividends in the wrong quarter, but this is now corrected. And the overall picture doesn't change. We can still see that the dividend payments are growing nicely year over year. So far this year, each quarter has outperformed the same quarter from the previous year. And of course, I also hope that the 4th quarter won't break this trend. For the coming month, I am planning to further increase my position in one of my smaller positions that are currently down, like Novo, Ferrari, Surgical Science Sweden or also S&P Global. So despite a market that is currently strongly driven by momentum, I will stick with my anti-cyclical investments. I just feel safer when I'm not buying very expensive companies in the hope that they will get even more expensive, even though the momentum strategy and the momentum factor are proven to work. But I also want to rate my whole portfolio with my stock scoring system and show you the results in my next update. Most of them are actually already rated, so I'll just need to put in the numbers of the last couple of companies. So there you have it. Everything that happened in the last 2 months and my plans for the next 2 months. And guys, if you would like to dive a bit deeper into the fundamentals and the markets of Ferrari, my newest position, this video where I dive deep into the details might be interesting for you. And as always, this is no financial advice, so please, before investing, do your own research and only use this video as a starting point for your own analysis. That being said, thank you so much for watching guys, and see you in the next video.